You're about to witness one of the most dramatic geopolitical power plays of 2026, and it's all happening over something sitting beneath the sands of Venezuela. We're talking about oil, literally the lifeblood of the modern economy. Just days ago, something massive went down that's already reshaping the entire global oil market, and honestly, most people have no idea just how big this is. So stick around because we're breaking down exactly what Venezuela's oil situation means for you, for the world, and for the intense rivalry between the United States and China that's playing out right now. Let's set the stage here. Nicolas Maduro, Venezuela's longtime dictator, has just been captured by U.S. military forces in a stunning military operation early this month. But this wasn't some random act of international law enforcement. No, this was strategic, calculated, and it was all about one thing: oil. Venezuela is sitting on something truly extraordinary. We're talking about the largest proven oil reserves on the entire planet. Get this, 303 billion barrels. If you're trying to visualize that, it's about 17% of the entire world's known oil reserves, all concentrated in one country the size of about twice the size of Texas. For context, Saudi Arabia, which everyone thinks has unlimited oil, has only 267 billion barrels. So Venezuela actually has more proven reserves than the world's most famous oil nation. That's insane, right? But here's where it gets interesting. For the past couple of decades, Venezuela's oil industry has been an absolute disaster. Production has collapsed catastrophically. Back in the early 2000s, Venezuela was pumping out around 3 million barrels per day. Today, they're barely hitting 1 million barrels daily. That's a two-thirds decline. The infrastructure is broken, the refineries are falling apart, and the money to fix it? It was never there because of U.S. sanctions and gross mismanagement. Trump came into office and looked at this situation and basically said, "We're going to fix this, and American companies are going to profit from it." And that's exactly what he's announcing now. According to Trump's own statements in the days following Maduro's capture, major U.S. oil companies, think ExxonMobil, ConocoPhillips, Chevron, are going to go into Venezuela and spend billions of dollars rebuilding the entire infrastructure. And get this, Trump said the U.S. will actually run the country temporarily until things stabilize. When he was asked about who's paying for this massive infrastructure rebuild, Trump made it crystal clear: the oil companies themselves will foot the bill. They'll invest the money directly, and then they'll be reimbursed from oil revenues. It's essentially a bet where American oil giants are wagering billions that they can resurrect Venezuela's oil industry and make massive profits doing it. Now, here's the part where China comes into the picture, and this is where things get really complicated and, honestly, pretty intense. For the last 15 to 20 years, while the U.S. was imposing heavy sanctions on Venezuela, China became the savior. When no one else would touch Venezuela, China was there, lending money, buying oil, and investing in the oil sector. In 2025 alone, China was buying approximately 76% of Venezuela's oil exports. Let that number sink in for a second. The vast majority of Venezuela's oil was going directly to China. It was a lifeline that kept the Maduro regime afloat despite international isolation. But there's a problem. Venezuela made a ton of promises to China and never fully delivered. When Venezuela hit economic trouble, China couldn't get the return on its loans or the full amount of oil they'd been promised. That's already put a sour taste in their mouth, and now, with the U.S. taking control of Venezuela's oil sector and pivoting production toward Western markets, China is essentially getting cut out of the equation entirely. China was benefiting massively from this arrangement. They had state-owned companies operating in Venezuelan oil fields, and they had deals in place that guaranteed them access to Venezuela's resources. Now, all of that is in jeopardy. Think about what this means from a geopolitical perspective. This isn't just about oil. This is about the United States reasserting dominance in its own hemisphere. For the last 2 decades, China has been expanding its influence all across Latin America through investments and loans. Venezuela was one of their crown jewels. But now, with a U.S. military intervention and regime change, suddenly that whole arrangement is getting flipped upside down. The U.S. is saying, "We're back. We're taking control of the energy sector." And by the way, we're going to be selling this oil globally, not just to China. This is a massive loss for Beijing, but here's what's even more important. What does this actually mean for global oil markets and for you? If American companies actually manage to revitalize Venezuela's oil industry, the implications could be absolutely enormous. Analysts are speculating that Venezuela could eventually ramp up production to 2, 3, or even 4 million barrels per day within a few years, especially if the infrastructure gets properly rebuilt. That would be an absolutely massive surge in global oil supply. Venezuela used to be called the Saudi Arabia of South America for a reason. If it returns to anywhere near those production levels, global oil prices could face serious downward pressure. And lower oil prices mean cheaper gasoline, cheaper heating, cheaper everything that depends on fuel. That's potentially great news for consumers, but it's not so great for other oil-producing nations. Russia, Saudi Arabia, and OPEC in general would see their market power diluted. This is why Russia and other oil-producing nations are watching this situation very carefully. They understand that a resurgent Venezuelan oil industry directly threatens their ability to keep prices high and profits flowing. Now, let's be realistic about the challenges here. Rebuilding Venezuela's oil infrastructure isn't going to happen overnight. Experts estimate that getting Venezuela back to peak production could take 5 to 10 years and require over $100 billion in investments. The infrastructure is ancient. Some of the pipelines haven't been updated in 50 years. Plus, there's the political uncertainty. Will stability last long enough for companies to invest? Are there international legal issues about who actually owns Venezuela's oil now that the U.S. is involved? These are real questions that oil companies are wrestling with right now. There's also the thorny issue of Venezuela's heavy, dense oil. It's not like the light, sweet crude that Saudi Arabia or the United States produces. It's thick, sulfurous, and requires specialized refinery equipment to process. But here's the thing, it's perfect for producing diesel, jet fuel, and industrial products. U.S. Gulf Coast refineries have the exact equipment needed to handle this type of oil, which is actually why American oil companies had such a strong presence in Venezuela in the first place. Decades ago. What's going to happen next? Trump is signaling that this is going to be one of his administration's major initiatives. He's talking about making money for Venezuela while simultaneously enriching American oil companies and reducing global oil prices. It's a win-win narrative from his perspective. But it all depends on whether U.S. companies are willing to take the risk, whether the political situation remains stable enough for investments to flow, and whether the global oil market can absorb the additional supply without completely collapsing prices. For China, this represents a significant strategic setback. They're losing access to Venezuelan oil, they're losing their investments, and they're watching the United States reassert geopolitical dominance. You can bet that China's going to be trying to salvage whatever it can from the situation or looking for ways to expand influence elsewhere in Latin America to make up for this loss, for the rest of the world. The implications depend entirely on how smoothly this transition happens. If everything goes according to plan, cheaper oil is on the horizon. If things fall apart politically, or if U.S. companies back away from the massive investments required, then Venezuela might stay a broken state producing minimal oil and the global energy market stays tight. Ultimately, Venezuela's oil is about to become a central battleground in the U.S.-China rivalry for global influence, and the stakes have never been higher. This is just the beginning of what could be a complete reshaping of global energy markets.